Hello everyone, today I'm going to talk about final accounts. See, I have seen many students, they face the problem that final accounts is very difficult to understand the rules of final accounts and how the adjustments are to be done. So this video will help you people to understand that final accounts is very simple and keeping all these things what going to tell you today will make final accounts a cakewalk to solve. Alright. So starting with basically final accounts is divided into three parts: trading account, profit and loss account, and your balance sheet. Now, to make it more simple, let's just start with an example. Let's assume that today I want to start up with a factory. Alright. Now let's assume that I'm starting with a clothing mill. मैं एक कपड़े का लेट्स अज्यूम कपड़े का बिजनेस करना चाहती हूँ. आई वांट टू सेल लेडीज गारमेंट्स, कुर्तीज बना के मुझे मार्केट में सेल करना है. सो एंड आई वांट टू हैव माय ओन प्रोडक्शन, my own advertisements, own selling techniques, and then finally selling the product in the market through my own advertisements and getting my customers. Alright. So this entire process I will bifurcate in the final accounts. How we are going to do this? First of all, production related all the things, that means getting the raw material, getting the cloth, asking the labor to work, arranging for the machines and everything. This all which is related to the factory will be recorded under one account which is called as a trading account. Alright. All those transactions which are not directly related to production but are indirectly related to production will be captured under your profit and loss account. Indirect expenses or indirect activities which are related to the office. Now, for example, production is taking place at one place. Let's assume that cloth is coming. With that cloth, I'm making kurtis. Then after that, the kurtis are being packed into lots. Now, packing those kurtis into lots, segregating them into, let's assume, small size, medium size, large size. After their packing, getting them delivered to various people all across the country, and then making the sales. This entire thing will be recorded under your profit and loss account. And finally, obviously, I'm going to have certain assets and some liabilities also. So all my assets and all my liabilities will be recorded at one place, which is called as the balance sheet. So final accounts is bifurcated into three parts. The first is your trading account, which relates to all your direct expenses or all those things which are related to the factory, to the direct production, that will be recorded in trading account. All those things which are related to your indirect expenses or which are related to office, which will help you in support of selling and also in grading the lot which you have produced, that will be written in your profit and loss account. And finally, all your assets and all your liabilities which the business is possessing, that will be related in the will be written in your balance sheet. Now, moving ahead, trading account and P&L account is also called as income statement, and your balance sheet is called as position statement. Now, income statement means that it is being prepared over a period of time. Because your production is going to take place around the year. आप रॉ मटेरियल लाते रहोगे, आप प्रोड्यूस करते रहोगे, आप पैकिंग करते रहोगे, आप मार्केट में सेल करते रहोगे. So around the year that is going to happen. So these transactions, these two accounts will have to be we have to keep on upgrading these accounts around the year. So that is over a period of time, whereas your position statement, your balance sheet, your assets, your liabilities will be reflected at one particular date. That is at your final year end. It can be as per your calendar year. So if your year end is calendar year, so it is going to be 31st of December, or if it is financial year, it has to be 31st of March. Now, going ahead, trading account, as I have told you earlier also, books of accounts have debit and credit. Now, debit is nothing but the left hand side of the account and credit is nothing but the right hand side of the books of accounts. So your trading account, which has all your factory related kharchas, factory related expenses, will be written in your trading account, and all your income related to your factory will be written on your credit side of your trading account. We'll start with the opening stock because we are going to purchase some raw material. Some, let's assume, obviously, it's not just the cloth which we'll be purchasing, but we'll also be purchasing some thread or maybe needles or maybe oiling for the machine, and everything which is related to production will be directly recorded in your trading account. So we will have opening stock, we will have purchases, we might have carriage inward. Inward as in the stuff is going to come into the factory in the form of raw material. Then we will be paying wages to the workers, because workers are somebody who are directly helping us in the production of the commodity. We will have manufacturing expenses, all those expenses which are directly related to the production, and any other expense which we are going to incur in the factory will be recorded in your trading account. And all those incomes will obviously come on the credit side. Alright, this is similar to your nominal account. As I told in my last video, debit all expenses and losses and credit all income and gain. Now, through your trading account, what you are going to do is you are going to total all the terms on the debit side and on the credit side. Now, if your credit is more and your debit is less, so the difference is going to be your profit. Why? That means you have gained more. Something more is coming inside, more revenue is coming in, and less expenses have been incurred which are related to the factory. So you are going to incur profit, and that profit will be represented by gross profit in your trading account. Next account after the trading account is your profit and loss account. Now the difference between trading and profit and loss is factory related things will go to trading and office related things will go to your profit and loss account. So in your profit and loss account, all your indirect expenses. Now indirect expenses can be related to your can be related to your administration. See, I have marked it also. I'll explain through this. Administrative expenses. Administration means controlling the things. Alright. So administrative expenses like giving salary to the not to the workers but to the people who are working in your office. Paying the rent. Now obviously my building can be of 3 floors. First floor is for the factory. So that factory rent is going to come in your trading. If next 2 floors are meant for office, then the rent of these 2 floors is going to come under your profit and loss account. Then you can have insurance, and if nothing is specified in the question, then entire rent is going to be your office related kharcha, and it will be written in your profit and loss account. Printing and stationery, insurance, so all these things which are related to journal administration will be recorded in your profit and loss account. All those expenses which are related to selling and distribution, because once the goods are produced, आपके पास कुर्तीज रेडी होके आ गए. अब कुर्तीज को आपने 3 कैटेगरीज में डिवाइड किया, स्मॉल, मीडियम एंड लार्ज. सो स्मॉल साइज, मीडियम, लार्ज साइज, आपने तीनों लॉट्स बनाए, आपने ग्रेडिंग करा उनका, आपने पैकेजिंग करा, आपने सेल्समैन हायर करा, आपने एडवर्टाइजमेंट करा, मे बी थ्रू टीवी और मे बी थ्रू एनी अदर सोर्स, होर्डिंग्स लगाए, आपने बैनर्स लगाए, 50% ऑफ. All these things are going to be your advertisement expenses or your selling and distribution expenses. Now, there are certain other expenses in the form of financial expenses. Now, these expenses are those which are related to the company, to the factory, to the office, but then you cannot count them as administrative or selling and distribution. They are finance related. Now, for example, for opening up my factory, I have taken a loan of 5 lakh. Now, every year on that 5 lakh, I need to pay some interest. So, that interest on loan is a part of your financial expenses. So, this way, also my assets are there on which I am going to charge some depreciation. There has to be some decrease in the value each year. So, that should also be recorded in my profit and loss account. Now, this was all about the debit side of profit and loss account. Similarly, if we go on to the credit side, the first thing which we have to do is whatever profit we had incurred in the trading, we will transfer it to the profit and loss account. And apart from that, any other income which is related to your office will be recorded in your profit and loss account. So your dividend received or your interest received, everything will you record here. And finally, the last step will be to add up, sum up everything which is on the credit side and deduct all the expenses out of it. You're going to get net profit. If your credit is more and your debit is less, you are going to have a profit, or vice versa will be you're going to have a loss. So this way we are able to make 2 accounts, trading account and profit and loss account. Now, just keep this thing in mind that trading account means all the expenses or incomes which are related to factory, and P&L account means all those which are related to office that will be recorded. Now, finally, the last step is to make the balance sheet. Now, the very and the most important thing in the balance sheet, we never write debit and credit. It is assumed, but just to explain the concept, I'm writing it on the right side. I have written debit, and on the left side, I have written credit. Balance sheet is the only exception where all your assets are recorded on the debit side and all your liabilities are recorded on the credit side. And as I spoke in my last presentation, I told you people that liability side, liabilities always have a credit balance and assets always have a debit balance. Now, simplifying this balance sheet into quick points, I will say liability side is bifurcated into three parts. तीन पार्ट्स में हम बैलेंस शीट की लाइबिलिटी साइड को डिवाइड करेंगे. The first is all your long term liabilities which are related to the internals of the company. Internal as in कंपनी के अंदर के जो लोग पैसा लगाते हैं. अंदर कौन होता है कंपनी में? शेयर होल्डर्स होते हैं, ओनर्स होते हैं. सो ओनर का जितना भी पैसा होगा दैट विल कम अंडर योर शेयर होल्डर्स फंड. Your second bifurcation of the balance sheet liability will be your long-term liability, but for the external people. Now, external people may be those people who have invested the money, but they don't belong to the company. They are outsiders. राइट. मैंने भी जो फैक्ट्री खोला, लेट्स अज्यूम मेरा जो पेपर सॉरी मेरा जो क्लॉथ मिल है, उस क्लॉथ मिल पे मैंने जितना भी पैसा लगा रखा है वो लेट्स अज्यूम 1 करोड़ का बजट था मेरा. सो 1 करोड़ 50 lakh I have invested, so that 50 lakh is going to come here in my shareholders fund, and rest of the 50 which I have borrowed from outside is going to come under your long term liabilities. Now there are certain current liabilities also. Current liabilities means within a year's time you have to pay them off, you have to finish them off. There can be creditors, there can be bill payable, there can be outstanding salaries. अभी इस साल आपका ईयर एंड हो गया, आपने सैलरीज दी लेकिन लास्ट मंथ की सैलरी नहीं पे करी आपने वर्कर्स को. So next year when you are going to open up your books of accounts, you are first going to pay them the salary. So that is outstanding for this year. As I told you that balance sheet is made on a particular date. So when you are closing your books of accounts on 31st of March, let's assume you are taking it as financial year. So when we close the books of accounts, we will first record those expenses which are still left as outstanding, and while opening the next year, we will first pay off those expenses. Now moving on to the asset side of the balance sheet, assets are bifurcated into two parts, fixed and current. Fixed are further bifurcated into two parts, those which can be touched and seen, like my land, my building, my machine. I can touch them, I can feel them. So they are tangible. Tangible means that can be touched and seen. Intangible assets are those which cannot be touched or seen. So all those assets which cannot be touched or seen, like goodwill, it is an intangible asset. They do exist, but they can't be touched or seen. Next is your current assets. Current means within a year's time, you're going to get them converted into cash. Now, one thing which is missing over here is your cash balance. That is also a part of your current assets. And the most important thing is that both the sides of the balance sheet should tally and it should be crossed with a double line. Alright, so this is all about your final accounts. In my next presentation, I will be talking about what are the various adjustments that takes place under your final accounts. Thank you.